Good afternoon, welcome to GrainTV. My name is Cody. Today is the 4th. It's a Wednesday and we had the market trading a bit lower after the sharp move in Tuesday's session. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn down 2 1/4 cents. Soybeans down 14.5 cents, and wheat in Chicago able to hang on to yesterday's gains for the most part, down only 1.5 cents. Take a look at the chart here for corn. You'll notice corn and wheat both were able to hang on to the gains that we saw yesterday. I think the gains that we saw yesterday were, for the most part, a macro move. We saw crude oil higher. We saw the stocks or the indices there, the equities trading higher. Corn, soybeans, and wheat all traded very sharply higher here. Of course, corn and wheat were able to hang on to these gains. Soybeans, not so much. But before we get into why soybeans trading a little bit lower here, let's go over the ethanol numbers that came out today. You'll notice that, one, production dropped. It declined week over week. It was down 30,000 barrels per day. We're now sitting at 948,000 barrels per day production. So you can see that we have had very strong ethanol production here over the course of the last 4 months. Now this keeps us well ahead of pace. We're about 5.6% ahead of 2013. You'll notice it was disappointing to see production decline, but this was, for the most part, I would say, expected. And I would expect to see some declines in next week's production as well. Overall, the fundamentals in the ethanol sector is really pointing toward a decline in production going forward, simply because we have increased stocks. Demand seems to be relatively lackluster for ethanol, and the bottom line is the crush margins are really not doing as well. The one thing that seems to be holding it up is DDGs. But overall, when you look at ethanol production, we have had a significant decline week over week. I wouldn't be surprised if next week we also get a similar type of decline. Ending stocks for ethanol this week were up 355,000 barrels here. That put us at 20.99 million barrels at the end of the week, so that is pretty significant, and I think another fundamental factor that will probably weigh on ethanol production going forward. Let's take a look at soybeans here. One thing that is very interesting is soybeans wasn't as able here to hold on to the gains that we saw yesterday. Take a look at the chart. You'll notice that we rallied up from that low that we've seen. Soybeans had been that relative weakness that had just been kind of grinding lower since we broke out of that low side of the trading range that we had been trading in really since the end of October all the way into January. Once we broke through that 991 area, we just kind of ground lower. Yesterday we had a very sharp move. I think it was, we saw probably some short covering kind of triggered by this macro move where we saw pretty much most commodities moving higher. But once we got up around $10, there's a pretty significant resistance level there. And I think, and not only did we see it yesterday intraday, but we saw a continuation here of the selling pressure that started kind of at the end of yesterday's trade session, and we shed a good amount of the gains that we saw yesterday. So I guess yesterday I talked to producers on GrainTV, reaching out to them, just saying that I think that these are opportunities to price grain, opportunities to potentially get some put protection or get some sort of strategies in there to lock in some of the prices that we saw yesterday, because fundamentally, when you look at the outlook here for price action, we have a lot of negative or potentially negative factors. One out of South America being the fact that harvest is really picking up. We have Brazilian real, which is declining in overall value compared to the US dollar, and all of this seems to make South American production competitive on the global market. Then you have the fact that China kind of switching their buying program to the southern hemisphere. All of this is likely to weigh on soybean prices here going forward. But that, and I think that's the main reason why I looked at yesterday's price move, and I'm really thinking that we're going to want to have some sort of protection in here. We'll have to see how the price action compares tomorrow when we get the export sales report. Let's talk a little bit about expectations here for that export sales report. Corn expectations are between 800,000 and 1 million metric tons. Soybeans expectations for tomorrow's report are between 200 and 500,000 metric tons, and wheat expectations between 300 and 500,000 metric tons. If we get any deviation for that, for soybeans and for wheat here, especially if they come in on the lower side of expectations, that could really impact prices here in tomorrow's trade. If you have any questions about what we talked about today, give us a call. The number is 877-472-4607. Remember, if you haven't done so already, go ahead and take a demo of a trading platform. You can get it for your mobile device, you can get it for your home computer. I'd be happy to walk you through how you can customize it to your own trading style and how you can customize it such that you meet your own hedging goals throughout the year. Thanks a lot for tuning in. We'll see you here Thursday for the Export Sales Report.